Hello all, welcome to Sand Compounding. This is Sandeep Anand. I'm starting a new series called 20 for 2030. And what does that even mean? For investors, in investing, the formula of compounding, which is very powerful, and the formula is P into 1 plus R by 100 whole to the power N. And N is an exponential factor. N is nothing but, we all know, it's a time invested, time we invest in the capital is invested in a business, or the tenure as we can call. And the tenure or longevity of our investment is very important because if we make investments in businesses that can sustain for 10 to 12 years with a good level of growth and at the right valuation, we are made home. The returns on the capital invested would be very high. Now, how do we find businesses which can run and which has such longevity of 10-12 years, especially in today's world of disruption? Every business is getting disrupted. Erstwhile, no wonder Warren Buffett, the legendary investor, used to find businesses which are least disruptive and that can run for a long time with growth, and he called it as moat. While moat investing, I don't know if it's really that relevant in today's generation because all businesses are getting disrupted with the advent of digital and mobile and internet. Now, identifying such businesses is a very difficult task, and I have tried my best to find out 20 such businesses which can pay way till 2030, and come 2030, in hindsight, these businesses would have been great to hold for such a longevity period. Now, how do we find these businesses? I've applied the principle of inversion, which I learned from Charlie Munger, and we look forward to 2030, and when we look back in hindsight, the inversion principle, based on that, what businesses could and why those businesses could sustain till that period is what I've done. So here are such 20 stocks, and one most important thing, not in investing, not all businesses are great investments at all point of time, but most point of time. So there could be reasons being valuation is one important factor which can control the time when we enter into a business. If there are frothy valuations, our returns would be mediocre. So it's very important to identify great longevity, great businesses which has longevity and at the same time that has good growth and the right valuation. So, but this could be a blueprint or a watch list that we can use to identify, and when the correction happens or recession happens, these great businesses could be a great entry point, could give a great entry point. Hope this gets interesting as we move on. The next business in 20 for 2030 list is, I would put it this way: if you have to play gold, globally, it is to invest in India's largest jewelry retailer, organized jewelry retailer, Titan Industries. Titan Industries is a very common household name in India. Under its flagship brand Tanishq, Titan has the dominance and the largest market share in the organized jewelry segment. Titan is owned by the Tata Group, and it's got a great management at its helm. It has recently ventured into new age products targeting the young population of India, which is almost 65% of population, less than 35 years old. And they have ventured into products like watches, perfumes, smartwatches, perfumes, ethnic wear, and many other things. It started as a watch company, and Titan is known for its watch brand. Now, Titan has also ventured into very niche, high margin business segments, especially on the premium designed jewelry segments and the diamonds and all those spaces which are targeting the high net worth individuals. Especially India being a land of wedding festivities and celebrations, a very vibrant country, the Titan and its gold business and diamond business will always find its value, will always find its growth, and it has done so consistently in the last 2 decades, consistently growing revenue about 10 to 15% and return on capital at about 30%. It's a sheer monopoly in the jewelry segment in the organized space in India, and with more and more products and burgeoning middle class, the growth is going to continue. But then let's analyze the financial metrics as well as other aspects of the balance sheet in detail. So let's analyze about Titan management and business overview. So as I said in the starting, Titan is India's most valuable and prominent brand in organized jewelry retailing, and Titan belongs to the most respected Tata Group management, and it's also the largest watch company and runs the largest chains of optical wear in India. Now, the company is also involved in retailing of many new age consumer brands targeting the millennial population in India, young population, such as perfumes, ethnic wear called saris, and then sunglasses in the name in the brand called Fast Track, and backpacks. So these are all catchy small ticket items that are getting sold, and it especially attracts the young population in India. Now, but having said that, the most part of the revenue that comes for Titan is from its jewelry retailing, especially on the gold business, and it's a flagship brand called Tanishq, which the brand name was chosen by Titan's first managing director Zagzag Desai. Now, lots of credit goes to Titan's previous CEOs, that's Bhaskar Bhatt, and the current CEO CK Venkatraman, for making Titan what it is today. I mean, over the last 2 decades, these two CEOs have really worked hard to make Titan what it is today, making it the leader in the organized retailing in jewelry segment. This management strategy of multiple stakeholders focus has enhanced the shareholder value very significantly. So their focus was not only on the employees or not only on the brand and their business, but also on the shareholders, and it has immensely rewarded the shareholders over the last 2 to 3 decades. Now, the journey of Tanishq started with the launch of 18 karat gold watches, started with precious stones in 1994, and that's how the journey started was and it soon grew to a 22 karat jeweler, gold jeweler, which who presented an exquisite range of gold and diamond jewelry. Now, they also maintained a perfect balance between the traditional appeal and the contemporary charm. Now, the premium top of value segments like high value diamond jewelry, studded and design jewelry in the name of brand name called Zoya, and wedding retailing are all significant drivers of Titan's high margins and high returns. So their target is to also play and lead in the top of the chain premium segment in the jewelry retailing, especially on the high margin businesses like diamond jewelry and studded and designer wear, specifically during the occasions of festivals and wedding, which are big events in India. Now, Titan opened 40 new Tanishq stores in 2018-19, record for that year, and expects to sustain the pace according to their new CEOs. So primarily it is an offline, still brick and mortar jewelry retailing, and they are slowly getting into the e-commerce side of the business through the acquisition of an omni-channel platform called Carrot Lane. Carrot Lane has both physical retailing as well as online e-commerce gold retailing and jewelry retailing. Now, these Tanishq stores are really opulent in to attract the customers optically, and they are show the opulence in their structure of these big large retail stores, physical retail stores, with excellent customer service, and you can see in that pictorially what we have represented. So the major portion of the revenue that comes from the gold part of it. So the gold GHS distribution, that is a gold harvest scheme or something they're running, that gives around 19% of the revenue, and wedding contribution is 21%, so which is a high margin business. High value studded contribution 10%, which is again a high margin business. Then there is gold exchange schemes, where it is they promote the exchange schemes and exchange offers, and that also is a easy way to attract the middle class segment in India, and that is around 31% of their revenues. Now, they have totally 289 Tanishq stores across Pan India, and they are still aggressively opening new stores. Jewelry division revenue breakdown is shown there. So they are targeting around market share of 10% in India, and a same store sales growth of 15%. So they have been maintaining 15 to 20% of same store sales growth, which is a staggering number, because maintaining such a high pace of growth in same store sales is not easy, and at the same time keeping up the margins and also efficient allocation of capital has been tremendously done by Titan management. Now, this pictorially represented the opulent Tanishq stores, how grandiose they look, and it beautifully attracts the customers. It's so beautifully organized, and it is a great way to attract customers. And also they have the Carrot Lane store, but Carrot Lane is more of an omni-channel strategy they acquired because it is an online e-commerce way of jewelry retailing. Then there are new ethnic wear sari shops which are opened by Titan group, and that is also slowly catching up the attention and slowly catching up on their revenues. Zoya is the high studded designer wear and diamond jewelry. That's a brand, flagship brand for them. And also Fast Track is the youngsters, young population set of merchandise, especially targeting the young generation. They have all those brands in terms of all those accessories in terms of watches, backpacks, optical wear, and many other things. And optical wear, I'm sorry, it's not only it's not the real optical wear, it is more of the sunglasses and all of that. Now they also have a optical wear segment, which we can see in the next slide. So here we go. There are four broad classifications of their business segments. So there is fragrances, which they recently started, like I think in 2018-19, and their top line has already crossed 120 crore rupees, with over 1 million pieces sold in FY19. And the branding they are doing for the perfumes and fragrances is under the name called Skin, SKINN, and their distribution reach has crossed already 3,300 outlets in the last 3 years for this brand. Now new products are recently launched and the names of body mist and deodorants. So Skin is a success, but it's yet to catch the market share, and it's not yet a considerable, it does not contribute considerably to the revenues of Titan. The second segment, these four are outside the jewelry retailing, what I put in this slide, and the second segment outside jewelry retailing is eyewear division. So they have something called as Titan Eye Plus optical stores. There are not many optical stores in the branded retailing segment, especially in that it's like there are no chains, there are no large chains, and so Titan is the first one to capitalize on that. They started this eyewear division, investing in brand building. They started with frame manufacturing and now ventured into the glasses and measured, and they started into the eye checkup, and creating customized glasses for the customers. And they have been growing pretty good. The growth has been around 29%, which is great in FY20, and Titan Eye Plus is a hit. And then there is Tanera, which was recently launched like 2 years back. That's in 2017 as a special occasion ethnic wear for women, especially saris. Now the addressable market size is huge, 40,000 crore rupees, but believe me, there are so many millions of stores and millions of brands selling saris in India. So although the addressable market size is huge, there are enough number of competitive players there and a lot of branding and super chains which are present in India. But still, after successful pilot, currently the business is in network rollout with a plan of over 10 stores to be rolled out this year. So they're starting small, just ventured into this. And the final segment is watches. So Titan is known for its name, in watches, because jewelry it is known under the name of Tanishq. Now Titan has recently launched smart products, smart watches, which is an in thing now, and they launched Titan Juxt, Sonata Act, Fast Track, Reflex. These are all brand names which are in activity tracking, etc. So it's pretty much smart watches. Now Titan became number 2 in wearables in Indian market volume as per IDC survey, and in e-commerce focus, they are focused on e-commerce, especially for these kind of products where they can increase the margins. So 10% of revenue today comes from online channels. That helps boost Fast Track growth, especially when Fast Track is a young millennial population target segment. E-commerce is a great way to play that. So here next slide is put on purpose because I wanted to show what's the best way to play gold, even if somebody has to do that. And jewelry retailing leader has proved it all. And if somebody had bought Titan stock against gold in 2010, look at the stock comparison stands out against the gold price. The bullion by post is the source for this, and that is denominated in US dollars. You can see that the gold price in 2010, March 2010, same time was $1,136 US dollars, and it hasn't done anything in the last 10 years. And it is pretty much it is at $1,700 or $1,800 as we're speaking. In spite of all the run that gold had in the last 2 to 3 years, it has just increase by 50-60 percentage. Maybe in in rupee nominated terms it might be even little more lower, a little more higher, but even then it's just a doubler. Even if you put that order of magnitude, the returns has been just a doubler, or 60% in US dollar terms. That's what we have to compare. And so in comparing rupees terms, if you had bought in rupees, it would be just a doubler in the last 10 years. Now look at Titan stock. In the last 10 years it has gone up from rupee 60 to right now it's trading at around 1200, 1250. That's a whopping 20 times. Take it again, it's a 20 times returns in the last 10 years by this great formidable brand in India. And that shows why buying a jewelry stock or to a leader in the market space is much brilliant idea. So the return difference is 10 times as against buying gold. Now coming to the revenues, profitability and segment wise analysis and balance sheet overview, Titan reported retail growth of 15% and a revenue growth of 10% consolidated for 9 months ending FY20. Now total revenue stood at 16,542 crores in Indian rupees as of 9 months FY20, and with their omni-channel CaratLane growing fastest at 68% from rupees 283 crores to 474 crores. So it's almost growing at 68-70% year on year. CaratLane, as I said, it's their omni-channel and e-commerce strategy that's fast catching up. Then their jewelry businesses including CaratLane contributed to 82% of the total revenue. So it's out and out jewelry play, Titan, and maybe in future some of the new age products could catch some market revenue share from their overall revenue. Now EBIT grew by 11% at a consolidated level 9 month FY20, and both jewelry and watches had high margins of 12 and 14% respectively. Now standalone PAT stood at 1,390 crores for FY19, growing by 26% and had a profit margin of 7%. Now this is what is surprising me. This is what is bewildering me in terms of Titan being the largest jewelry retailer in India with such a large population, such a burgeoning middle class that's coming up. Titan's total revenue in 9 months FY20, that too not for full year. So if you just extrapolate that to the full year, it might be around 22,000 crores rupees, and that is roughly $3 billion. So the total revenue they're getting from this whole country, being the largest retailer in the jewelry segment, is just $3 billion. Now we can even evangelize how much potential is left out for this leader of jewelry retailer, and how much potential is left out for Titan in the coming years and the coming decades. Now looking at the balance sheet, capital employment, return on capital, how they allocate the capital. So capital allocation is one of the key strength of this company. Total capital employed was 6,182 crores in rupees in 2018-19, and the total return on capital employed was very high at 35%, and this is a staggering number. And when you even flip back to 10 years, 15 years, 20 years, you can still see Titan maintaining this kind of margins and this kind of high return on capital consistently, with a consistent 10 to 15% revenue and same store sales growth respectively. That is what a phenomenal management is behind this great firm. And the highest capital is now allocated jewelry business as expected. That's a significant contributor to their revenue, and the total they paid out 444 crores dividend in the same year, so they do pay out well. And the division has been focusing on the wearables category over the last few years, which is another important thing. The market is shifting from the erstwhile watches, the analogous watches, to the digital watches, and even more in the wearable sector with activity tracking and many other things, and that is fast catching up. And we can see that already deeply penetrated by Apple in US and even globally in many players. Smartwatches are becoming the next smartphones, and People have stopped almost started wearing smartwatches across the globe, and we can see how much market share that Apple has already fetched, and the Switch watch companies are already shutting down or are already on losses. Many of the flagship brands are closing down, and that's bound to happen. And Titan is cleverly moving to the smartwatch division pretty well in India before even other brands catches up. Now they have also they are also investing in many things, like in the wearable sector, like acquired a patented technology in the field of advanced gesture recognition technology from HUG Innovations, and also hired the entire team in India. So they are targeting many new products segments, targeting youth, like the youth segment, the young generation, like belts, watches and wallets and other accessories. Looking at the balance sheet, they have a cash position of 1,175 crores, debt position of rupees 2,393 crores. Operating cash flow pretty much in line with the PAT, so they are like at rupees 1,243 crores, and they have good cash flows, good free cash flows, and they are plowing it back well, to grow the business. Market cap of rupees 111,800 crores. So that is that is another thing. It's around $15 billion market cap, and it's a small firm that way compared to the size and potential of what Indian consumer segment, consumer class can afford in the years to come. Trading at 74 times earnings, this is one company that has always traded premium due to the leadership in the organized segment and the jewelry especially, and they have high returns on capital employed over many years, consistent revenue growth of 10 to 15% and consistent same store sales growth, great innovation, great products, consistently coming up with new products and new segments, Titan is poised to grow even at current valuation, even a little higher, but they will always maintain that premium unless there is something drastically changes. Last slide, why I think Titan will still be a great business to hold in hindsight. Tanishq is their gold jewelry flagship brand, which will achieve 15 to 20% sales and same store growth, and 25% EBITDA compounded annualized growth rate over FY 18 to 21. And as it gains from a shift towards organized players led by strong brand, growing store network, and focus on high value studded wedding jewelry. Now, the strong brand value will move up even more in the organized retailing, as more and more unorganized retailing is closing down, and Titan is the leader in the space to garner market share. Now, India as a country has insatiable demand. It's a crazy demand for gold. It's considered the most auspicious thing ever in India, and that's been the case in centuries and centuries. It's considered auspicious metal of prosperity, wealth, status, festive cheer. For anything and everything there is gold, people flaunt gold as a symbol of prosperity, and it's part of the wedding opulence and grandiose and whatnot. In India it's everything. So in fiscal year 2019 alone, India imported gold worth nearly 2.3 trillion rupees, that is $33 billion, and that contributed over 6% of the total imports into the country. So gold import is a big part of India's deficit, and India is the world's largest importer of gold with annual consumption of 800 to 900 tons, which just vindicates the point, like the demand for the yellow metal will always remain in the country. It doesn't reduce even if the government puts high import tax duty. They have tried everything, and government has now stopped doing that and has come up with many other innovative way of monetizing gold in terms of making bonds and bullions and all of that, and let's see how that works out. Their focus for the next 5 years will be on expanding stores and gaining market share in jewelry retail space. They are also venturing into new product categories belonging to the millennial and the young population of India. Now, increasing wealth in the HNI segments, that is ultra net worth individuals in India, will increase premium brands like Zoya, studded and designer wedding jewelry. Now, burgeoning middle class and high disposable income will increase discretionary sales, especially in the gold exchange schemes, watches, perfumes, ethnic wears, and wedding jewelry to a great extent. Overall, I think Titan is going to be still kicking on with their revenue growth and kicking on with their great brand name and garnering even more market share. It will be a great business to hold when we look back in hindsight in 2030. Hope this was helpful. Thank you.